All right, good morning, trade pros. Welcome to Morning Market Update for this beautiful Thursday, March the 6th of 2020. Hope you guys are having a great day. You might notice I'm in the office today, and that's because Government of Canada recognizes Trade Pro Academy as an essential business, so they won't really mind. I'm just kidding. It's probably not legal for me to have anyone here except myself, so here I am. And plus, Reese has her own business. She needed some quiet space. So I'm safe. You guys don't worry. Everything's good. I'm in the office just for today. It feels good to be honest with you. It feels good to be back, but eerily like quiet and kind of spooky. Anywho, markets are up. All right. This morning we're going to talk about a few things. Number one, the jobless claim number came out this morning, and there was a lot of anticipation about this jobless claims number because this is how many people have filed for unemployment insurance in the last week. All right. And so when we look at this, it's a leading indicator for the economy. There was a lot of fear around this number because obviously with the coronavirus, everything's been shut down. There are 15.8 million people working in leisure and hospitality in the United States, and that industry is just literally shut down overnight. So people are saying, no, it could be anywhere from 2 million to, we saw estimates as high as 4 million. And it came in at 3.283 million, which obviously is a huge leap. The prior number was 281,000. So if you do that, it's almost 15, 20 times bigger than 15 times more closely bigger than what the prior number was. But the expectation was for a massive loss of jobs, anyways, for people to file for unemployment claims. All right. And because everything's ground to a halt in the industries of leisure and hospitality. So 4 million was the high end of the range, and the low end was 250,000. We weren't going to get that. All right. So because we came in below the high end of the range at 3.28 million, the market initially had a little bit of a sell off close to the overnight lows, and we're up. And I think the market wants to continue rebounding through today and tomorrow. We could get another 100, 130 points higher. I still think it's a dead cat bounce, but we'll find out. All right. We're going to have a V-shaped recovery. That's the riskiest trade right now, is to be buying this thing in the wake of this whole sell-off. And obviously for day trading, the upward momentum is very appetizing. That's where we're probably going to be playing this morning. And at the same time, if you zoom out on any chart, you're going to notice that we're recovering, but we're still way below where we were just on February 1st. Go look at a chart then. We're putting in new all-time highs. All right. So in a month, a lot could change. Jobless claims, the initial number was 3.28 million, which means that's how many people had filed for unemployment for the first time. Continuing claims is 1.8 million, which means these are people just getting it week over week who have already been unemployed. So that's a little bit of a positive surprise to the market, but it's a really negative number from an economic standpoint. All right. Also, yesterday, we got negative rates in the United States for the first time since 2015. The 1 month and 3 month Treasury bills fell into negative yield territory. All right. And they both, in 2015, both of them were at minus 0.002. All right. Yesterday, it fell much below that to 0.0533 on the 1 month, and the 3 month was at 0.033% of a yield, negative to the negative side. So, the 1 and 3 month joins or rejoins the European debt, which is negative yielding already. All right. So we're into negative yield territory on the short end of the curve. 2 years still positive, 10 years still positive, but it's lost a lot as well. They got close to inverting or being negative as well. So it's a very interesting occurrence. Doesn't mean that you're going to be able to get paid to get a mortgage. The banks will never drop their rates below zero. All right. You'll never be paid to take a loan. But this is what is happening, which is interesting. Despite these rate cuts, there's a higher degree of risk because of the economic outlook, and banks are actually raising the rates for mortgages even though interest rates are being cut. And I find that interesting. All right. And I actually think it's a good call because there's a higher degree of risk for them to give out that capital. So that's where we're at. All right. In other news, the $2 trillion Corona bill is passed yesterday in the U.S. Senate, voted 96-0 to pass the bill through. The House reconvenes tomorrow morning at 9 a.m. Eastern for a vote, a verbal vote. And we're going to find out if it goes through. It's almost 99% likely it's going to go through, and Donald Trump will sign it. So another $2 trillion bill is already being priced into the market. That's causing some of this upside. And we're just stopping out some shorts, some late shorts, greedy shorts into the lows. We're now paying the price, getting stopped out. I don't think it's over yet. I think it's a dead cat bounce, and we're going to try the downside one more time. And if we fail that second time, then, we start to go up. And, if coronavirus numbers decline or the rate of growth at least declines, then that's going to spur a lot of optimism, and we'll start the recovery process. All right. In today's markets, Japan is down 4.5%. Hong Kong is down 0.7. China's down 0.6%. India's up 5%. All right. It's good to see some positive numbers out of India. Things are getting clobbered for weeks. In Europe at midday, London's down 1.6. Paris is down 1.4. Frankfurt down 1.7. So equities in Europe are also sliding lower, but under 2%. Futures, Dow, S&P, and NASDAQ were in negative territory. S&P has now reclaimed the prior day close. So too has the Dow and the NASDAQ. In fact, the Dow looks a little bit more bullish than other markets. It's pushing up off the prior day closes to a greater extent. All right, crude oil this morning was down 2.5%. Overnight low structure 23.41. Prior day close I have it here at 24.27. So we are not yet at the prior close, but we're recouping some of the losses there as well. Gold is up quite significantly. We were trading 1665-ish or 64.80 area just a few moments ago. Now we're down a little bit off those levels. All right, remains a big shortage of physical gold, and that's pushing the upside on futures. All right, Bitcoin down 4%, 66.55, and we have a super heavy economic agenda today. We had GDP Q4 in the United States. Some new traders might think that's relevant. It's completely useless. Q4 was a whole different market than we are today. Traders don't really care about Q4. That got shrugged off. Initial jobless claims was good. Corporate profits, retail inventories, wholesale inventories, all that stuff is backward looking. It was for a month when things weren't as bad. It was in February. All right, these numbers are going to be very interesting in a couple of weeks' time, though. 10:30 this morning, we have natural gas inventories. Traders are going to be watching that pretty closely. Then 11 a.m., we have Kansas City Fed manufacturing survey. That should cause a little bit of volatility in the markets right at 11 a.m. All right, 1:30, 32 billion 7-year note auction. Fixed income traders take note of that. And at 4:30, you get the money supply and Fed balance sheet, which is going to be super interesting to have a look at also. So interesting start to the morning. Really grotesque print on initial jobless claims from a economic perspective, but in terms of a market sentiment perspective, some people expected even worse, and they're shrugging this off. So bad news wasn't as bad as it could have been. Therefore, it's now good news. The market's rebounding. I think the stimulus is taking hold. The Federal Reserve throwing everything and the kitchen sink at the market, starting to take hold. And, we were due for a pop. We were talking about it in the trading room last Sunday. Market Analysis Lab was saying, look, Monday, Tuesday, Wednesday, I think we do a transition in the market, but I think this week we recoup some of the losses. We just gotten carried away. When people I haven't talked to in a decade are texting me panicking, it's sad to say this, but it's probably time to start buying a little bit for a rebound. But it's a fade. Remember, I still think the trend's to the downside. If the next move down fails, then I start to get a little bit more excited. I like to buy later on at a higher price, but also at a higher probability, rather than trying to bottom pick for the medium term, especially. All right, because I think bottom pickers get smelly fingers. In today's market, we're going to try the upside. I think early morning, get a little bit of a sell off. All right off the opening bell, and then see if we catch some support and rally upward. There are transition levels that we're going to map out in a moment with the team. We get back below the transition levels, and we're going to probably start looking for the short, as we should. All right, ride the momentum. Don't try to predict it. If you're trying to predict in this business, you should start one of those Crystal Globe services. If you like predictions, where you tell people to call. Remember Miss Cleo? Call me now for your free tarot card reading. Yeah, so you start one of those. Predictions are good in that business. All right, or the illusion of prediction, at least. You ain't going to predict nothing in the market. Go with what you see in real time. All right, so the idea is for the long side, after a little bit of a dump in the morning, we pick up the long side and we get going. I'll be very careful this afternoon. I got a feeling something hits the tape. All right, I don't know what it is. Just got an intuitive feeling that there's going to be a volatile event this afternoon. All right, so keep them tight, keep the stop loss tight. And today, I'm probably going to tighten the stop a little bit, but not as tight as a usual day. Usually trade 5 ticks on the ES. Been trading 10 last couple weeks. Probably narrow it down to 7, 8 maximum for today's trade. All right, love you guys. Be safe. That's it. Tomorrow's going to be Friday. By the way, I will not be doing a morning market update Friday. You're on your own. I'll do a little bit of an update in the trade room, but we won't be doing a morning market update, unfortunately, tomorrow. Taking a morning off. I love you guys. All right, be safe. I think Vicky might actually do one. We're going to chat, but that's it for the week for me for morning market updates. Love you all. Be careful. Be safe. Have a great weekend. And, this Corona thing is serious. I'm driving around. There's nobody on the streets. And, at least we're taking it serious. We don't know how serious it actually is until after the fact. But why gamble? All right. It's a great time to sit at home, I was talking to my wife yesterday. It's like, we've spent a lot of time. It's awesome time for families to bond. All right. Do some bonding. Make some babies. Take care. Have a good day. I got to flip it over to Steven for the oil report. Take care, guys. Ciao. Do some bonding. Make some babies. That's my advice to all of you. All right. Boxy, going to throw you on the mic, throw you the wolves, and let's talk oil if you do not mind. YouTube, I bid you farewell.